Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories, and really try to solve problems to support each of you. Today's topic is a very important one because I think it solves probably the most significant problem that many of you face when offering to help people with a credit and funding program. While the credit and funding program is a remarkable value, there is a refundable setup fee that we've normally required to be paid up front to be able to offset our hard cost. Well, we met with our investors on Saturday, 2 days ago, and they agreed to offer a deferral. And I'm a bit surprised, but pleased nonetheless. And so today, we're going to talk about how you can enroll clients in the credit and funding program whereby the refundable setup fee is deferred. So let's go through that now. So again, the topic, deferred refundable setup fee, explanation: some prospective clients will not or cannot pay the refundable setup fee at an enrollment. So we want to be able to reach out to more people and help more individuals by illustrating more flexibility, really taking a great risk on them, but they're good people, so we'll do it. In today's discussion, we're going to announce the new deferral. Now, it's very specific in how it works, and so it's important that you listen carefully and understand how it works so we don't have any misunderstandings or client frustrations. As we typically do, we like to kind of build up to the topic of the day. So we first want to start with understanding what we do. And then we'll talk about who our target audience is, and then we'll get to the topic of the day, the deferred refundable setup fee. So what you and I do as technical advisors is you and I help individuals and small business owners improve their credibility to qualify for financing, whether it be business loans, auto financing, mortgages, etc. We use our credit and funding program to help anyone access a minimum of $100,000. And how is that possible? How is that realistic? How is that achievable? It's by improving their 3 C's: their credit, their collateral, and their capacity. Now, I realize that different people have different levels of what we'll say baseline credibility when they come to us. Some people are just fine on their credit. Some are just fine on their collateral. Some are just fine on their capacity, which means cash flow, or some combination of those. On occasion, we'll have clients that come to us, and frankly, all 3 of their C's are good to go, and they just need the loan packaging and access to funding. Our program is certainly proven, legal, and effective. It's to stop and say, well, I wonder if this is real, is an illustration of financial illiteracy. Because if you and I can help educate people, what does it take to get funding? It takes credibility, what we commonly refer to as the 3 C's. When people jump to conclusions of, oh, this isn't credible, this is too good to be true, this is a scam, it typically means that they don't understand how finance works. But you and I do, and it's based around helping people become credible enough for funding based upon the 3 C's, as well as having a loan package. So that is what we do. And then let's go back and talk about our target audience. We love working with imperfect people. I have a new client. He is in Mississippi. Wonderful man, elderly man, has 1 leg, 1 eye, stone cold broke, but he's one of our newest clients. And so we work with all different types of people from all different areas of the country, just magnificent people. So when we talk about imperfect people, we love to work with people that have money problems, people that have shitty credit, people without collateral, because these are the folks that are typically locked out of the financial system. They don't have access to capital. But that's great, because what you and I do is help people become credible enough to qualify for financing. So we overcome the imperfections of money issues, credit issues, and or collateral issues. So that's who we are and what we do. Now I want to go ahead and let's dig into how this deferral works, and then we'll open it up for dialogue and discussion because this is brand new. I frankly didn't think that our investors would approve this, but they did on Saturday, so here we are rolling it out. The impact to each of you is we should be able to enroll a whole lot more clients if they don't have to pay the setup fee up front. But let's go through it in detail so we understand exactly what this means. So the deferred refundable setup fee process. In the credit and funding program, we help imperfect clients, as we talked about a moment ago, become credible on paper by improving their 3 C's. We've been talking about that, haven't we? There are hard costs for doing this, and the clients normally pay the refundable setup fee upon enrollment so we can help them become credible because there's hard cost. It's not just money in our pocket. It's expenses that are incurred on the client's behalf. As mentioned, however, we will now offer a deferral of the refundable setup fee as described below. So let's go through exactly the process, and then we'll be answering your questions. We all want to be on the same page. We want happy clients. So clients will enroll as usual. So it doesn't matter if they plan on paying the refundable setup fee in advance or deferring it, the enrollment on the front end is the same. So no change there, no different forms, no different processes. Now, if the client's coming through one of you who are an affiliate, of course, you're going to refer them to your landing page. They'll fill out the lead capture page and then proceed to accept the terms and conditions. No change. If it's coming from one of you who are a white label partner, no change. If you have a landing page, you'll steer them to your landing page. If you're getting e-signature via Adobe or DocuSign, just the same. No difference. So step number 1 is the same, no change. Step 2 also is no change. We're going to send the client the onboarding packet. It has 2 specific action steps, one of which is to complete the soft credit pull authorization. No cost to them, no impact to their credit, no obligation. And we're going to also complete their personal financial statement. Both of those are on the onboarding packet that we send out to affiliate clients. And then depending upon how the white label partners want us to do it, either they send this out or we send it out for them. So steps 1 and 2, no change. The change hits with step 3. So once the client has enrolled, they've been onboarded, now we're deciding what to do with the refundable setup fee with 2 options. 2 options. Option 1 is the normal option as it works now, or has been working. Client pays the refundable setup fee. Now, again, if you're an affiliate, we're taking care of the billing and collections, and the $9.99 is collected. If you're a white label partner, you're able to price that as you want, and you collect it from the client. So far, what we've discussed is no changes so far. Step 1, client enrollment, no change. Client onboarding, no change. And then 3A, no change. So this is just a refresher. The change happens with 3B. So after the client has enrolled, they've been onboarded, let's say that they want to defer the refundable setup fee. They don't want to pay or can't pay the $999.99, we'll call $1,000 refundable setup fee, or whatever price point the white label partner is wanting to make it as. So the client will request a deferral, which is fine. We have an Adobe packet for that deferral that we'll send to the client. Now, here's the catch. We always talk about catch. There's a catch. We will defer the $9.99. That's fine. But we are going to charge a processing fee. And so let's debate that for a moment. The reason that we're going to charge a processing fee is two reasons. Number one, we want the client to have at least a little bit of skin in the game. Our experience is if a client has no skin in the game, the likelihood that they'll follow through is much less likely. Number two is we need to be able to document what's called consideration. So in legal terms, consideration is something that is paid that further solidifies that a contractual agreement exists. Because we're going to go out and do all this work to help the client become credible. We guarantee them minimum $100,000 funding. We want to be able to have documented consideration. So if you have a client that wants to do the deferral and does not or not willing to pay the $99.99 processing fee, then stop. Do not pass go. There's no option then. They can either pay the full or they can pay a processing fee, which means we're going to implement, which we'll talk more about in a moment, but we will defer the setup fee with the processing fee. Now, how does this deferral work? As is in writing, it's in the Adobe packet. We're going to defer the timing of the refundable setup fee, and we're going to give them net 30 terms. And I think you all know what net 30 terms means. So they don't have to pay that now. They'll pay it later after funding. So we will begin implementing the client without delay. So just because they've not paid it doesn't mean that we're going to drag our feet or treat them differently or they won't be assisted the same. That's not the case at all. We will begin without delay, with one exception, which is clearly stated here. We are not going to implement the credit sweep until the refundable setup fee is paid in full. Now, again, how much is the refundable setup fee? It depends if they're coming to us as an affiliate or a white label partner. So implementation will begin without delay once they've paid the processing fee. And this includes us transferring assets to them. And that's a big part of this that I'm going to be talking more about in a moment. You know, they only are out $99 and we're transferring $10,000 of receivables to them immediately. $10,000. And we're going to help them liquidate that, but we'll talk about that in a moment. So where else could you spend $99 and immediately, let's say within one business day, get $10,000 of assets? That's crazy good for the client. Okay, step number 3, client will not receive the grant allocation with deferral. So what does that mean? Well, normally the refundable setup fee is $2,500. That's the normal, but with the grant that cuts it down to a little bit less than $1,000. If they're going to do the deferral, they're not going to get the grant allocation. Therefore, their refundable setup fee just became $2,500. Not due now, due later, but it's now $2,500. So that is further incentive if they can and they are willing to pay the setup fee up front. That's better for them, better for us, better for you. But if they want to defer it, they're only going to pay the processing fee. But what are the ramifications? We're not going to do the credit sweep until they've paid it in full. And secondly, they're not going to get the grant allocation, so the refundable setup fee is $2,500, but they don't pay it up front, paid later. Makes sense? So there's 2 ramifications of not paying the normal $9.99. The first of which is the credit sweep's not going to kick in until they paid in full, and they don't get the grant allocation. Their refundable setup fee, which is still a refundable note, is now $2,500 versus the $9.99. Here's the biggest benefit of all. When clients, well, there's 2 types of clients that won't pay the refundable setup fee. There are those that can't afford it, and then there are those that won't pay for it. Well, if they can't afford it, then this is a no-brainer, right? Because we're able to get them plugged in and get processing right away. However, for those that just won't pay it, we can move forward, and there are the ramifications that we've mentioned. But the big perk would be for those that need cash, that need money, that frankly may not be credible for funding yet. We're going to assign them a $10,000 portfolio, which is the normal in the credit and funding program. And we're going to help them begin liquidating that because that increases their cash flow. So we've talked about this before. When we transfer $10,000 of receivables over to a client, they have three primary benefits. Number one is they have collateral on their balance sheet to cover for funding. That's big. Secondly, it increases their liquidity because accounts receivable is considered a cash equivalent, which increases their liquidity, especially if they're low on cash, they're broke. Then having injected liquidity is huge. And then third, we don't want just to leave it as accounts receivable. We want to convert it from AR into cash to put cash flow into their business, into their bank account, to show that the business is solvent and cash flowing, which increases their borrowing capacity. So with that being said, of course, the bottom line is the same. In the credit and funding program, we assist participants in improving their 3 C's and creating a loan package so they qualify for a minimum of $100,000 of funding. I was working with a client yesterday. Well, I should say prospect. He hasn't signed yet. I assume he will. But he's looking at over $1 billion capital raise. Now, is he qualified for that? I don't know. We've not seen his financials, but 100,000 is the minimum, not the maximum. But the bottom line is today, we are rolling out that for clients that want to defer or need to refer the deferred to refundable setup fee, they can do so. And we've gone through in great detail the process. So let's open it up to the questions, comments, concerns that any of you have. Just go ahead and type it into the Q&A of Zoom. It's kind of like a chat box. All right, Alfred's asking about, as a white label partner, does this still count the same? Because white label partners are expected to bring in at least 8 clients a month. And yes, the client enrollment is what we're looking for from our white label partners to make sure that we're out and active. And so these count just the same. Absolutely, Alfred. So thank you for that question. Who else has questions regarding enrollment of clients, which hasn't changed, onboarding, which hasn't changed, or the 2 options of how they can cover the refundable setup fee? Option 1, no change. Option 2 is the topic of today, and it's brand new. It's designed for those that are tight on cash or just unwilling to pay the refundable setup fee. Allows us to begin working with them right away without delay. They will have a processing fee to show commitment and consideration, and then we'll begin working on their file immediately. And most importantly, we'll be working on their loan package, business plan, all that. But most impactful is that we're going to transfer those assets over, the receivables, to them, help them start liquidating those receivables to get cash in quickly. Carlos is asking a question. Yes, so as an affiliate, you're still getting paid the same $100. Yes, sir. So affiliates make $100 in the front end, 3 points of the capital raise. White label partners pick their own pricing. So they typically make, it's up to them, but typically they make $1,000 on the front end, and most white label partners are charging 12 to 15% performance fee on the back end. But yeah, this does not change the dollars and cents of the relationship. Essentially, all of this is the same, highlighted here. The only thing that's changed is we are willing to do a deferral. But to get to that deferral, we get to that, we go through the initial steps. All right, Alfred has another question, and his question is, how do we know if they qualify for the deferral? Everyone does. So there's no minimum credit score. There's no minimum time in business. There's no underwriting, essentially. Everyone has this option. Now, I wouldn't encourage you to push everyone towards this. It's better for everyone if they pay normal, the refundable setup fee, but no one will be declined for this. So there's no filtering that you have to do. And you may want to go back to some of your current prospects and let them know that there's a new option if money was an issue. You might even have some clients that have signed up but haven't paid. That's perfectly fine. Visit with them or have them visit with us, however you want to do it, and then we can plug them into option 2. So this is fine for people in the past that have not done as they promised to do, and it's an available resource going forward. Polly asked about the credit sweep, and that's exactly right. It's number 2 here. We're not going to do the credit sweep until they pay the refundable setup fee in full. All right, Carlos has a question, another question, and about the payout. So affiliates are paid 2 ways. They're paid on the front end, the $100, and they're paid 3 points, 3% of the capital raise, and that's paid out after each tranche of the client's capital raise. So no, you don't have to wait until they finish their capital raise, Carlos. Alternatively, if you're a white label partner, you're determining how much you're paid up front and how much you're paid off each capital raise. So when it comes to money, there's always 2 answers. Are you asking as an affiliate or are you asking as a white label partner? All right, Alfred's got a third question, which is a good one. You know, can we market this as no money up front? I don't know that I would do that, because while we can defer the refundable setup fee, as we've been discussing, if they're going to defer it, we're going to ask them to pay a processing fee for 2 reasons again, right? Number 1, skin in the game. Number 2, contractually to show consideration. And so, and plus it covers some of our admin cost, of course, as well. But the point specifically is, since there is a processing fee if they don't pay the refundable setup fee, I don't think it would be accurate to go say that there's no upfront cost. Unless, now there's a few of you that have been paying the refundable setup fee for your clients and just tagging it on the back end. And I suspect some of you may in fact consider covering the processing fee for some of your clients and collecting it back on the back end. So if you're making that tweak, then you could go out to the market and say no money up front. I know as well as you do, most people like a program that has no money up front. And if we were just a loan broker, that would make sense. But that's not what you and I are, right? You and I, we've covered, we're technical advisors. We're helping them become credible. We're building their credit, their collateral, and their capacity, their 3 C's. I would argue that I don't think anyone in the industry does all of that without the client paying anything. See, if they don't realize that we're building their 3 C's, then they'll probably push back real hard on the refundable setup fee and say, well, I shouldn't have to pay an advance fee for a loan. Well, you're exactly right. You shouldn't have to pay an advance fee for a loan if you're credible. But if you're not credible, someone's going to have to help you, because you've not done it yourself, improve your credibility of your 3 C's. The analogy that we used last week, which seemed to be met really well, is let's do an analogy that you and I are realtors, right? So how are realtors paid? Do you pay a realtor when you retain a realtor? No. Normally you pay a realtor after closing. Well, that's really how we're paid. But you'd say, well, wait, Tom, why do we have a refundable setup fee? Well, the analogy would be as if you hired a realtor, and the realtor, let's say it's to sell a house. So you retain a realtor, and the realtor comes out to do the walkthrough and to take pictures of your house that's getting ready to be listed on Zillow or Trulia or wherever MLS, and says, well, Dan, your house doesn't look so good. You got weeds in your flower bed, your grass is splotchy, Your paint is old in the kitchen. Your tile in the bathroom is 25 years old. We need to clean this house up. We need to stage this house so it looks good, so it would sell. Well, then normally you would pay for the staging cost. You would pay for the mulch and to have the grass cut and to have the kitchen painted, right? We'll just call that in general staging. Well, that's really what we're doing as an analogy, is staging the client, making them look better, because right now they probably don't look good enough, either their credit, collateral, and or capacity. So while they do normally pay a refundable setup fee for help improving their 3 C's, again, it is a refundable setup fee. Now, if you have a client that comes to you and says, hey, I'm fucking perfect, man. I've got an 800 credit score. I got collateral coming out of my orifices, and I've got all kinds of cash flow. I don't need help becoming credible. Great. Then we'll make an exception for them. But what you and I know is most people don't have that level of credibility, which is okay. They need help. That's why you and I are here. And so for us to cover our cost to help make them credible in a refundable deposit setup fee, I don't think is unreasonable at all. Otherwise, they're asking the realtor, hey, would you come out and cut my grass? Hey, realtor, would you put some new mulch down in the flower beds? Hey, realtor, would you go buy the paint and come in and paint my kitchen if you want to sell my house? That's not part of the normal deal. So you can see that this is the prep work, making someone credible enough. And so you may have to educate them, because a lot of people don't think that deep. They're just going to be like, well, Pauline, I just want money. Well, do you qualify? Are you credible on paper? That's what we do. That's the gift that you and I have. The talent, the expertise is to make people credible on paper. If they're already credible on paper, I would tend to agree with them. And I think we should waive or defer their setup fee. But in this case, we can work with individuals that are imperfect. They don't have to pay the refundable setup fee up front. Instead, they'll just have a processing fee. Who else has questions, comments, concerns? And Tony's asking a good question, but remember, Tony, this does not change the process. You enroll clients normally. We're going to onboard them normally, right? So up front, nothing changes. Don't be confused, Tony, or anyone else. Nothing changes up front. The decision comes into play when the refundable setup fee is to be paid. Are we going to invoice them to pay it, or are we going to defer it? But that does not change the front end of the process. So keep it simple. Go out, enroll clients. We'll onboard them and we'll give them the option. Again, if you're a white label partner, you can give them the option. Carlos is asking if this is on our YouTube channel. Well, it's not yet because we're doing a live recording now, but yeah, by noon today, it'll be on the YouTube channel. But it's just not that complicated, right? This is the same process we've been doing, well, all the way down to here. And then if they want to defer, they just simply let us know and we'll send them the deferral Adobe packet. It's not complicated. It's not complicated. And if you're an affiliate, this is all you need to know. Just refer people into your landing page. We take care of the rest. If you're a white label partner, you're a little bit more involved. Of course, our contact information is here. It hasn't changed. You can call us, you can text us, you can email us. Who else has any questions on this important topic today, which I'll summarize briefly? As of today, April 3rd, 2023, we are now offering to defer the refundable setup fee for the credit and funding program. We've recapped who we are, who we help, and we've gone through, I think, in painstaking detail, the process. The process starts the same. It only differs if they want to defer it. And we've talked about this, I think, exhaustively. Any other questions, comments, concerns anyone has? All right, well, let's go make it happen. I think we're going to have a record-setting month. Have a great day, and we'll talk to you soon. Bye-bye.